The Hedgeless Horseman here. It's January the 29th, 2025. I'll try to make this a relatively short video because I have things to do soon. First of all, thanks to the sponsors. Markets today. Gold is actually, I think gold futures, ticked above 2,800. Silver is having a very good day. Crypto is still, well, churning, I was gonna say. That is quite interesting. The amount of, hyperbole that's come out in the last week or two, and still crypto's basically stuck. I don't take that as a good sign, or not for crypto at least. And as you've probably seen as well, there's just almost an infinite amount of crypto tokens that are being created. And nowadays I see really big news service accounts on Twitter tweeting when Bitcoin goes to 105,000, and then when it goes to 106,000 or whatever, even though it's been up at what 107,000. So it's what is deemed to be newsworthy has a lower and lower threshold in terms of bullishness. Because I don't remember that anybody cared when Bitcoin went from $22,000 to $22,500, a couple of years ago. Because that was seen as who cares? But now it's deemed to be newsworthy if Bitcoin is up to levels it already has been a week ago or something like that. And that I think that tells you a lot about how, in a sense, fragile the sentiment is. That again, it's like looking for smaller and smaller and smaller excuses to deem it to be bullish. I hope it makes sense. What I'm trying to purvey here is that you're grasping for straws more and more and more, let's say, to put a positive spin on it. Let's face it, nobody buys Bitcoin because they expect to make 2% or something, and it's that's newsworthy, let's celebrate. People buy Bitcoin because they think it can do what it did over the last 12 years, going up, 10,000%. That's just the truth. It's why anybody buys high. It's like when you see now stock run, I don't know how much it might have ran, but it's people are not buying into that because they think, I'm willing to accept smallish returns from here on out. Not typically, at least. No, they expect that ramp to just continue. That's why they're buying. They see a move that's been, 1,000%, then they buy because they now get in thinking that they might get the next 1,000%. But now in Bitcoin, it's even a 5% rise is it's time to celebrate. What does that say about their amount of the threshold for grasping at straws? I don't think it's a good sign that the new normal seems to be that people are somewhat cheering any 1% move from here on out. That's not why people bought, and I've said that before. It's I think a lot of people are not aware that we're in different times. Crypto or Bitcoin is what? I don't know how much it is. Couple of $1 trillion. It's not a niche thing anymore. It's not. Like I said recently, if who's the boss of BlackRock? I don't remember his name, but he said, if all the asset managers allocate 2 to 5% of their funds to Bitcoin, we might see $500,000, $600,000, $700,000 per Bitcoin. That's pretty crazy. You need the entire investment space to have a 2 to 5% position, which is much more than gold today, for you to have a multi-bagger. Compare that to whatever, a junior. It's like, oh, uh, they could go up, 400% just from a sentiment swing. You don't need it to be 2 to 5% of all money in the world to be allocated to that particular stock to get a multi-bag. I mean, the risk reward is getting so bad, and still it's like people don't see it. Again, it's the same thing with buying. Anybody that buys highs, I mean, nobody really cares about the risk reward. They just see what has happened, and then they just project that forward. That's enough for people to buy. It's like we're in different times. Bitcoin is not a niche thing. You're not contrarian if you're long Bitcoin. Bitcoin is probably the most talked about asset in the entire world almost. So it's just people who really have never actually been contrarian or bought low, let's say, or bought cheap, or even think about price to value. They are the ones, I think, who think there's like, oh, Bitcoin is a great idea. It's like, I would say it's the worst risk reward. I mean, Bitcoin nowadays, I mean, I don't think it has had worse risk reward. I think it was already super bad at 60, 70,000. That doesn't mean it can't go up 30, 40% more, which we've seen here. It's like that. All else equals, like the risk reward just gets worse and worse and worse. Like, why you should be buying the cheaper a cyclical sector gets. The risk reward goes up because price goes down, and vice versa. Anyway. So this was, kind of interesting. Alamos Gold announces receipt of environmental permit amendment allowing for start of construction of the Puerto del Aire project in Mexico. I'm not 100% sure, but I assume it's a open pit pro. I'm not 100% sure. Anyway, it's like the takeaway is that Mexico is beginning to thaw. Basically, that Mexico is took a big hit from that, ban to open pit mining stance and whatever. So, and I know some contrarians who have said it's like now might be the time, or recently now might be the time to be picking up Mexican assets, because, again, if it is a short-term problem that is gonna go away, let's say, I mean, that's what you're front running. Things will get better and the value will be coming back, because Mexico will not go ahead with, let's say, banning all mining, and then you could pick up assets for cheap. I mean, one I think is kind of interesting from that perspective is Sonoro Gold. I mean, it's a very small company. Now it's down to 50 million CAD in market cap, and they have a 500,000 project that might go to 1-2 million ounces potentially, but it's a small project. But what's been holding them back is a permit, because it's expected to be very low capex. So, I mean, again, I just, it's not I'm betting the farm on Sonoro Gold. It's not a tier 1 asset. It's not a tier 2 asset. But it looks like, hey, this is a pretty straightforward, simple project. And could get put into production for, I don't know, 20 million USD or something. And again, at these gold prices, even if you have 30,000 ounces or 40,000 ounces a year in production, I mean, that's some serious free cash flow potential. And we've never seen this before. Again, we've never seen gold mines making this much cash with the projects, the gold in the ground selling for this cheap. So I mean, you can look at other Mexican juniors, of course, but it's like this is I think something to consider, at least, that Mexico might be easing up. I'm not saying Mexico is the world's best jurisdiction. They have cartel problems and all of that, but still, I mean, if most or a lot of risk is priced in, I mean, then it comes down to what's the risk reward. I mean, if you look for whatever cases where there's no risk, for example, there is always risk. but you're never going to buy anything ever, because the only case that's deemed to be absolutely risk-free, that might be priced very, very highly, and everything might be priced in. Like the blue sky has, if the blue sky is priced in, then there's not a lot of upside left, obviously. One other thing, it just got announced that why isn't it this up on the news in the channel? Anyway, McEwen Mining is taking a stake in Goliath Resources, and of course McEwen himself, Rob McEwen, he has, I think, participated in 3 placements, so now he's bringing his mining company into Goliath. I mean, I don't know what the short-term reaction is. I mean, obviously today, for example, it's red right now, but I think, I mean, given the action yesterday, you wouldn't be too surprised. That it's like, almost, if there was a rumor, buy the rumor, sell the news kind of thing. And now it's out. So again, with the amount of volume yesterday and all that, I wasn't too surprised that there wasn't that much follow through today. But let's think about this for a moment. Just from because like let's face it, investing in a sense, I mean, you're basically front running emotions, and news obviously affect emotions, and the reaction to news depends in a sense on emotions, yada yada. So I would say that the sentiment wise, with this kind of vote of confidence or doubling down by McEwen, I think it should skew the risk reward on reactions to coming news releases to be more favorable. What I mean by that is, and I'm going to get to that later, when they released 5 holes that were good but not like world class, let's say, maybe it was 2-3 news releases ago, I mean, it sold off for like 8% for a while. Then we got a monster hole and other good holes in that, and then it's ramped, I don't know, 30-40%. So the question is, did literally the entire project, all of the value of Goliath, go down 8-10% on 5 holes in the assays that were announced 2-3 news releases ago? I mean, that seems quite ridiculous. 5 holes swings the entire long-term intrinsic value by 10%. I have a hard time seeing 5 holes, especially since they're not, obviously they're not discovery holes because it's a discovery, but it's not an undiscovery hole either. It's not like, they were only good, so that, that means the discoveries are no good or whatever. No, so it's just crazy. And then, of course, the good holes that came after that, did they all of a sudden change all the long-term value potential or intrinsic value of Goliath by 30-40%? No, I mean, that's just the market being the market, people reacting to news, and momentum gets going and all of that. My point here is that given that McEwen Mining is buying into it now, and Rob McEwen's doubling down in a sense, and he's considered smart money. I mean, he was very early on into Great Bear Resources, for example. It's not like he's gonna have a 100% hit rate, of course. I mean, people point out, well, McEwen Mining hasn't done so well, yada yada. No, but he's still an expert. I mean, he's not dumb money. He's not dumb money. It's not like even the Landins, for example. Every single project they put money in or bet on, whatever, that always works out. No, it's just on average they have a way higher batting average than almost everyone else. And I would say McEwen probably has a better sense of what the potential value is in an exploration project than pretty much all us retail, for example. So it's a vote of confidence. So anyway, I mean, why I think it skews the, and I'm not as you know, I'm not really a catalyst flipper or a catalyst hunter, because in the short term I think the short term is so chaotic. again, it's like when they released good results and Goliath went down 8%, 10%, then they release great results and it's up 30, 40%. I mean, how are you gonna foresee that? I mean, you don't know what the news is gonna be or anything like that. The only thing that made sense for Goliath or any other real, exploration, uh, any growth story really is like, okay, in 2 years, let's say, or 12 to 24 months, do I think there's a good probability that the market will value this higher than it is today? I mean, that's about as close as I can get for like a good case. Betting on what I think the exact news release is going to be, the very next news release, and then what the reaction to said news release is going to be. I mean, that's almost impossible. But with that said, I think this vote of confidence, and this is obviously super fresh because it was announced today, underwhelming batch of results, like when they put out good holes, won't easily produce the sky is falling narrative with McEwen just doubling down. I mean, it goes without saying. It's like, if the next news release contains 5 holes and they're only good or they're kind of poor, whatever, it's still gonna be very hard. I mean, you can easily see it in a way that, like obviously McEwen is not betting on what those the very next set of news uh, assays are gonna be. So it's gonna be very hard for, let's say, the forum narrative to turn into, well, okay, the dream is dead or whatever. So I think it will provide a cushion, and will basically short fuse, I was gonna say, momentum to the downside. And as well, overwhelming, it's like, good, great, above expectations, whatever you want to call it, batch of results will probably be even more positively charged because it will rhyme with McEwen's action and bring comfort. I mean, again, this makes total sense from a psychological perspective. Imagine you own something or watching something, you just saw some smart money bet on it, good news comes out. Of course you're going to be thinking like, yeah, this guy knows. I mean, makes sense. He's buying because this is going to go up so much more. It's going to be so much more valuable than at the time he bought, which is today. So you're going to be more comfortable believing that positive news has tangible value. If you understand what I'm saying. That makes perfect sense to me. I think this is going to skew again. And note, I mean, the timing is like most of the answer results are still out. So it's like, I don't know, what prompted this. Is it he also got 1 year warrants, I think, half a warrant. So it's like, with only half a warrant over 1 year, I mean, obviously that kind of signals that if McEwen is okay getting those kinds of warrants, I mean, that kind of signals that he thinks there's a good chance that over the next 12 months it will be higher than $2.5. And then maybe people will scoff at it. It's like, oh great, like 70% in 12 months. I mean, obviously that would be superb returns. If you could average, I mean, a compounding rate of 70% per 12 months is way above, obviously, what I mean, that's above world class. So that's kind of funny, but I think that goes back to crypto space where it's like you're not used to thinking in realistic compounding terms because you see literal worthless tokens going up 1,000% in a day. So you think that's normal in any way, shape, or form, while it's not. And maybe, I mean, it could be seen that again the warrant time frame and half a warrant suggests that, hey, McEwen thinks that there's good appreciation potential within 12 months. And also given the timing of it's like you're really in mid-season, well, not even mid-season maybe, I think the majority of ASA results are still out there. Obviously it looks like he wants to get in now before all the results are out. Right? Otherwise, I mean, if he really wanted to, I'm not sure about this, I'm gonna wait until all the assay results are out. Of course, he also has a personal stake in it, so he wants to see the momentum go higher for his personal portfolio, basically. But it's like there's no real way, I think, to spin this except that this is, again, vote of confidence, and I think it's gonna skew the risk reward for whatever that is worth on the coming news releases, because like this is the guy who again found Great Bear very early. He did sell pretty early though, and I don't know if he's he doesn't want to make the same mistake I was gonna say, because now he's doubling down. Anyway, obviously good vote of confidence, and one thing also to, I would say, put a good perspective on things. I mean, this sector has been so crap. Success has been so lowly valued. I mean, you can buy stuff out there that's worth $1 billion for, I don't know, 200 million, or something worth 500 million for 100 million and below that. So I mean, it's just incredible how little value is priced in. That puts a blanket, obviously. It's like it skews our perception of what something is worth, because let's face it, 3 million ounces in the ground, they're uneconomic, are never gonna get permitted, or whatever it might be. They will never be monetized. I mean, one could say that's worth zero. Still, you have 5 million ounces in the case of Great Bear, and at the time they didn't even have 5 million ounces on the books. That got sold for 1.8 billion when gold was at 1780. Now the same amount of gold today relative to that period of time is obviously worth a lot more, because now miners have record margins. They didn't have record margins at $1780 gold. So an ounce in the ground is worth a lot more now, and they still got 1.8 billion for it. And to point out the fact just how valuable an ounce of gold production can be, Musselwhite and Eleanor, which recently got sold by Newmont to, I think it was it Orla and some other group. They are 200,000 ounce producing mines per year. They're not really low cost. I think Eleanor had, I think it's like 1,500 ASIC and 1,1800 ASIC of last time I checked, somewhere along those lines. So let's say decent cost mines. But again, at this gold price, even if you have $1,700 ASIC, you still have over a $1,000 margin, which is again crazy. At 1780, you didn't have $1,000 margins. Even at, maybe like the absolute tier 1 mines, but it's like only, I was going to say Fostwell or something. I mean, which miner had ASIC of 780 in 2021? I mean, that's kind of, when the COVID inflation had already started and all that. It's like almost no mine had that. And these mines that have like 1.5 million ounces of reserves, they're up and running, they're producing, so their sunk costs are there, you don't need to pay to build them. But they get acquired for above $500 Canadian per ounce, of reserves at least. So imagine that. It's like, yes, obviously you have to take away the capex and all that, but it's like, this is the sign of how valuable ounces in the grounds are today. Economic ounces. So when we think about it, like how much is priced into Goliath at this point in time? 250, that's not fully diluted, but 250, let's say 300, whatever. 300 million Canadian. If this ends up being a tier 1 discovery, I mean $300 per ounce is not that much actually. If you have, let's say, 4 or 5 million of highly economic ounces, so it's like a tier 2 mine at least, and obviously we don't know, we haven't closed it off, so it has the potential to be let's say tier 1 mine. I would be surprised to see less than $300 per ounce in an acquisition scenario. So what I'm trying to say is that even though it feels like, whoa, Goliath has ran so much because the shares are, multi-years high, just barely, and you look around the sector and, everything is kind of dirt cheap. I mean, I wouldn't even say it's that richly valued, relatively speaking, given the potential we're seeing, but in absolute terms as well. It's like, I mean, this is nothing. If you have a multi-million ounce good to high margin deposit in British Columbia, Canada, I think there's many mining companies that would happily pay multiples of this to get a hold of that, because Canada is, for better or for worse, one of the premier jurisdictions that basically every major seem to be wanting to have more operations in it. So it's like, that's my only point. If this is the real deal, there ought to be plenty of runway left. Because then you can look at it, yes, short term wise, I think this adds positive skew for every, in terms of reactions to coming news releases. But if we think, again, I don't like to play the short term. I have no idea where Goliath is going to go in the short term. I don't know what the news is going to be in the next news release. But again, if we take a step back, okay, let's say we do it a more, longer term risk reward scenario. It's like, if this is the real deal, and they will continue to drill and make it even better, de-risk it even more, whatever, within 1 year it should have a higher value than today. Within 2 years it should have even a higher value than it has in 1 year, right? So if in whatever, from now to 2 years from now, maybe then it will be obvious that this is a legitimate tier 2 or even tier 1 discovery. And if gold prices are anywhere near these levels, this is gonna, I think, look really cheap in hindsight. Then the risk portion is, okay, what is the risk that at the end of the day, regardless of how long of a time you give Goliath, how long of a holding period you have, what is the risk that at the end of the day, Goliath will not have something that's worth at least 250 million? I mean, if they have something worth, and this is excluding dilution, if they have something worth 125 million Canadian, then you're looking at a potential loss of 50%, excluding dilution. But what is the risk of that happening? Given what we know, given the assay results, given what we know of all the different zones and all the potential discoveries, etc., what is the likelihood, what is the risk that Goliath will at least not have something that can be monetized to the tune of at least 250 million Canadian? Given the results again, and given these moves by McEwen, I have a hard time seeing that at the end of the day Goliath will not have an economic deposit that's worth something, with the option, let's say, of it being a tier 2, tier 1 discovery. Literally a Great Bear type acquisition target. So what I'm saying, I'm not in a hurry, even though it feels like, hey, it's, recently it's outperformed most stocks and all that, because you look at this. But it's like, if we take a step back and really consider, it's like, again, and we appreciate the fact that no ounces are created equal. There are stuff out there that's selling for $50 per ounce, which might never amount to anything and should have a, almost a value of $0 or $10. And there's stuff out there that is valued at, let's say, $50 per ounce, where it's like, yeah, that's probably gonna get built, that's probably gonna get developed. It's maybe a low cost mine even, so that deposit could have profit margins of, ASIC margins of more than $1,000, $1,500. So it's like, what should that ounce be worth? $600? I don't know. But it's like that's what I guess makes this sector hard in a sense, because like actual value, actual or ounces that are actually valuable can be worth several $100s per ounce to a large company. Ounces that have no hopes of getting monetized and nobody would care to monetize it because there's no real value, it could be overvalued at $30 per ounce. That's why it's like it's apples and oranges, really. And one thing that I just thought I would bring up, and if you go back a few videos, I pointed this out at the time. This was January 7. I saw this person. I don't know this person. I'm not trying to bag on this person. I'm not gonna. Again, there's no ill will, but I pointed out the fact that I don't think this is a good strategy, and I pointed that out at the time of him posting this. Lots of hits, and this is the reaction I was talking about to the news release 2-3 news releases ago, which were good results, but the stock sold off like 8% or 10% of the entire value of Goliath had gone up in smoke on 5 holes, which is absolutely ridiculous. Anyway, lots of hits of decent high grade, but it seems to be concentrated in narrow veins. Sold half my GOT position and redeployed it back into FDR, Founders Metals. That's actually getting some traction. I should have left it in FDR in the first place. So this is, again, I pointed it out at the time, hindsight investing. He believes what the market was selling, meaning minus 8%, and I mean by then it had already happened, obviously. So in reality he's selling because he thinks it's going to go down more after it's gone down 8%, and he bought Founders Metals because that had been going up recently. So he was again he believes that after minus 8% Goliath will keep going down because of those 5 holes and the reaction to those 5 holes, and he believed he shouldn't have sold Founders Metals, or should have put the money into Founders Metals, because it's in an uptrend, short-term uptrend, and he believes it's going to continue. This is the result. This is January 7. This is when he sold half his Goliath position. This is what Goliath did after that, and he put that money back into Founders Metals because it had been, quote, working. Wasn't that almost exactly the quote? Yeah, getting some traction. So Founders Metals had been getting traction. Goliath for at least a 2-day period, and I mean it's kind of been flat. Let's say last. When is that, like in the last month it's been flat, whereas Founders Metal had been trending up, and especially recently, and at the day of his selling Goliath was trending down, a 2-day downtrend. Okay, so far, and this might, I mean, change obviously, but so far, I mean, how does I pointed out how illogical and, I mean, how typical and illogical I thought it was. And since then, so he sold this, so he missed out on that and up to that. And what he bought with that money went like that. So that was obviously a very costly reshuffling in the short term. He missed out on a, what was this? I mean, he missed out on a, Jesus, is that correct? Yeah, okay. So he missed out on, let's say, a 90% rally in just a few weeks. I didn't think that it went up that much. 90% rally in a few weeks. That's what he gave away. You would be happy if you got this kind of return in 3 years. And he bought something that went down instead. I don't know what my point is, except that this is typically how, again, the market is going to make you feel. Going back to Bitcoin, it feels good buying something that has been going up. It feels good selling something that has, well, it feels bad holding something or buying something that has been going down. That's just how it is. And of course, I can't also, not to be a hypocrite, I can't be a hindsight investor and say, well, this is what happened. You missed out on a 90% run and bought something that went down. That's why that was a bad decision. No, I didn't know Goliath was going to go on a 90% run. I didn't know Founders Metals was going to go down. So I would be a hypocrite if I just again were outcome dependent and just looked at what happened and then makes like, yeah, this was bad because of he did this or that, or the results were this and that. No, as I pointed out at the time, it's his strategy that I had a problem with. And if you employ strategies like that, this is what the result can be. He was very, so far unfortunate to literally almost in the short term, he top ticked what he bought and bottom ticked almost what he sold. That ended up going on a real ripper. So we can't judge him based on the results. If you look at the results, well, it was a horrible outcome in the short term. But that doesn't mean that, first of all, Founders Metal can go down here and then up whatever, and he's going to make money on it. And theoretically, Goliath might go down here, and he from that perspective, at that point in time, he looks smart. You know what I mean? I mean, it's ever changing, so you can't really make nobody knows the future. My problem was his line of thinking and how he appears to be applying, well, his strategy, which appears to not really be much of a strategy. And that simply opened up for the very, very common thing of buying high and selling low. So we had both examples in this example. Buying something because it has gone up and selling something that really didn't go down it didn't, 8% of Goliath value didn't go away, and I think it should already be valued higher. So let's say a run up on maybe nothing more than sentiment and a sell off on nothing more than sentiment. And he basically played into the market's hands in that perspective. He sold what had already gone up, and he bought what had already gone up. He sold what had already, overreacted to the downside. So imagine if you have this strategy. I mean, it's going to be really, really hard to make any money. Because anytime he does that, he's making a mistake, obviously. Because this is not really a strategy. This is basically doing what feels right. And he might be much better at other stuff and all that, but it's just this, in this particular example, this is not in my opinion, a very common sense, logical train of thought, which led to some actions that maybe you shouldn't have taken. And what makes this even more interesting then in this case is okay, now Goliath has gone up. So should you be selling because hey, after Founders Metals went up like this, that marked a short-term top. That's the problem. If you just if the lesson you take away is that, again, seeing this, I'm never gonna sell if something goes down, and I'm never gonna buy if something is up. That's obviously not that's not the way to correct it either, right? Because there are cases where value increased a lot on a news release, and you should be buying it higher because value went up 200% more, or something went down, but you should actually be selling because value decreased more than has been priced in by the market. So you can't have any real fixed rules. It's all about context and risk reward, and with a proper time frame. Because again, like I said, I think this usually is kind of skews the risk reward in a more favorable way for short term or initial reactions to news releases going forward. Perhaps like maybe apply to every single news release that comes out from the all the assays that are left to come. But I'm not making any predictions. So it's like, yes, for sure it's gonna go up tomorrow or on the next news release. I'm just saying it skews the risk reward in a sense if you are a short term, let's say, catalyst hunter. But I would still say, again, taking into account how valuable a good mine is today, and how valuable, let's say, a tier 2 to tier 1 deposit would be in Canada today at this gold price, I still think that the only reasonable risk reward or case, I was going to say, for Goliath is not, I'm buying Goliath today because I think it's going to go up on the next news release. That's not really a strategy. That's kind of a hope and wishful thinking in a sense. But I could certainly mean that that's why I hold Goliath, is that I think there is the potential for this to be a legitimate tier 2, tier 1 discovery. I think it's starting to be looked at it that way, but if it gets even more de-risked and all that, I mean, I don't, again, I think this market cap is not richly valued in that case at all. Is that a guarantee? No. What happens if for some reason at the end of the day they can only put together 1 million ounces of economic gold? Well, it's not going to be, not in this market, it's not going to be worth 250 million. There's other deposit of 1 million ounces that are economic and doesn't have a market cap near 250 million. Even though at NPV value, I mean, take Amex for example. They look to have a very profitable, like 1 million ounces plus project. They have a market cap of around 120 million. But then one could say, well, okay, what are the odds that, okay, if they have 1 million ounces of, I think maybe Goliath would have higher capex and stuff, not as favorable infrastructure. Anyways, like, okay, what are the odds that they're gonna have 1 million ounces of 1 million ounces of economic ounces, a 1 million ounce mine, it's gonna be worth 120 million, for example. I think the risks are that I expect it to be higher than that. I mean, there's some people who believe this is going to be 5 to 10 million ounces. And if at least a few million of those ounces are highly economic, again, this is going to look very, very cheap. And we have McEwen apparently believing that to be the case as well. I think the best, I don't know, help I can bring in a sense is to just get some, I was gonna say, thinking going. And it's like in the short term, there's very hard to see an obvious case in the short term. If you have a case built on the next news release, that's not really a case unless you know something that nobody else knows in a sense. I would still say, and that's why I have it in the HODL folio, at 250 million, I think there is enough upside and there's enough doubt that I think it's still maybe underappreciating the chance of this being a legit tier 2, tier 1 discovery, which could get sold for, if these gold prices stay here, for a couple $2 billion. And then compare that to the risk of, like, okay, for this to really be a fail, let's say, they need to find not even 2 million economic ounces. I don't think that's going to be the case. And you have the optionality. The spectrum is that they can make more discoveries, and the zones they already know and can drill out could show that there's, yes, like 5 million ounces plus, and it becomes a Great Bear type ending, I was going to say. I hope that makes sense. Again, it's like we're not investing is not about certainties; it's about probabilities. And again, if that fits your whatever time, that's why it's like somebody's recently. Well, and I've talked about this before. It's like why don't you say when you why don't you say, when you sell and when you buy? I mean, I usually don't say when I buy, but saying when I'm, let's say, buying or hinting that I'm buying or whatever, I think that's much easier because that's the one thing I am typically good at. Selling, I'm very bad at. And I mean, in some cases, I might be buying over weeks. Am I supposed to say every time I buy something? And then it's like, the problem also with position sizing. Let's say I have a huge position. I've talked about this before, I think. Let's say I have a huge position. Take First Nordic, for example. If I sold 1% of my position, and that's still the best risk reward case I know of, let's say, and I sell 1% of my position. It's like, okay, I sold some First Nordic. And let's say my position goes from whatever 15% down to 14.5%, and that would be obviously a absolutely nosebleed type position, which most people would find crazy. Am I bearish on First Nordic in that case? The narrative is going to be, oh, he's selling, he's bearish. And that's the opposite of the truth if it's my favorite case. That's why it's so hard. That's why it's like you're not really doing it. I can't do anyone any favors by saying exactly what I'm doing because I have a totally different risk profile than most, and I have my own personal conviction of every case. I can say what I see, and then anybody can form their conviction. And if that suits them, maybe they will buy something, or maybe they will reduce something. But that's why it's like when people ask me, it's like, what stock should I buy? It's like, I have no idea what stock you should buy. I don't know how your temperament is. I don't know what your time frame is. I don't know how well how well your conviction holds. Only you can know that. It's like, because let's face it. Let's say I have a 10 position in something. It goes up 100% without too much news changing the value. So it's the risk reward has decreased. Let's say it was the best ever, and then it goes up 100%. So now it's maybe the best I am aware of, but it's not once in a 10-year type thing. So let's say I sell 12, I reduce it down to 8%. That's more than a 50% haircut. And let's say that's still my largest holding. And if I said it's like, oh, I've reduced my exposure by, let's say, 60%, and or I've sold I've sold more than half my shares, that's gonna come off as extremely bearish, I would think. Again, from people that don't know better, because that's gonna be the focus, not the fact that it's still my largest position, if you know what I mean. So if somebody has a 0.5% position, and if I were in his shoes, I would 16x that position to 8%. But he hears, he sold half of more than half of his holdings. So he takes that 0.5% exposure to, I don't know, 0.2%, and I'm like, what are you doing? This is still the best case around. So that's why it's so hard to actually. You're not really helping anybody by saying that. It's like, again, it totally depends on how much you already have. I mean, if I have 0.1% position in Goliath and I double that, compare that to, it's like, I doubled my position and I had 5%, went to 10% of my portfolio in Goliath instead of from 0.1 to 0.2. It's kind of, I doubled my position, whatever. But if it's, okay, does that mean that it's your highest conviction case? I mean, 10% is kind of ridiculous. large, obviously, for most people, but it's like taking it from point 1 to point 2, that doesn't mean much, really. I mean, that's what you expect in low conviction cases. So it's like context matters. And for our long-term returns, position sizing matters a lot. So you can't use a blanket statement like, would you be when people ask me, it's like, would you be buying this or would you be selling this? I have no idea what your position size is. I don't know how your portfolio looks. I don't know what risks you're taking in other parts of your portfolio. I don't know how much volatility you can handle. So I have no idea if you should be buying or selling. Maybe it's a case that I think is like, if I had none, I would be buying, but that guy has 50% of it, so he should be selling, even though it might be the biggest buy, and vice versa. But if you think about it, that makes sense, because it's like context is the most important thing. So it's like there's no real blanket statement. That's why it's like, yes, I'm positive on this stock, or positive on that stock, or negative on that stock. Maybe I don't talk about stocks I'm really negative on. But yeah, at least I hope it makes sense, because like I had to explain this to somebody who thought or asked me, it's like, oh, shouldn't you be even more transparent and whatever? And I explained it's like, what would that actually achieve? Because then you would have to go into all the, again, it's like, oh, well, this is actually a buy for that guy, but it's a sell for this guy, and it's a buy for me, but if some other stock goes down, then this all of a sudden becomes a sell, and that might happen tomorrow. So it's like, how on earth can you make sense of that? No, you can't. Anyway, yeah. So I mean, to wrap it up, I guess. I mean, I'm still, yeah. Again, I I see merit in hodling Goliath still. That's what I guess I'm saying. I don't. But with that said, again, to take into position, accounting for positions, like, could Goliath be one of the best performing stocks this year? Yeah, absolutely, it could. Is that a guarantee? Absolutely not. Should one be betting the farm on Goliath? I mean, it's still a exploration play. I just think in the short term, the risk reward, especially for the rest of this the assay season, I think it's gotten skewed for the better. That's about it. And who knows? Maybe the project will change a lot for the better after all the assets are out, or they won't. It's like nobody knows. But I thought it was a good example of, again, it's like, yeah, the dangers of, let's say, of not really having a strategy, that you open yourself up to this when you don't really know. I mean, you don't have good reasons to do what you're doing, let's say, and also at the same time you can't really use that as a lesson. That's like, oh, I'm never gonna buy a stock that's up again, and I'm never gonna sell a stock that's gone down again. You can't say that obviously either, because like context matters. Yeah. Anyway. This is why investing is more of an art, not a science. And it's like, as long as we apply common sense, have strategies, buy and sell conditions, buy and sell reasons that actually make sense, and preferably from a longer term risk reward perspective, I don't think, I think you're gonna be able to make money forever in the mining space, or any stock, well, in any sector really, because like common sense, patience, and reasonable reasons to sell and buy. I mean, that's if you have that on lockdown, it's like that's more than 99% have. This is not rocket science. Anyway, consider me biased. I own shares of all companies I mentioned. Some are banner sponsors as well. Consider me twice biased. Not buy or sell recommendation. I don't know what stock is going to be up tomorrow, next week, next month, next year, 2 years from now. I don't know what stock is going to be down tomorrow, next. If I knew it, I would be 100% all in whatever I knew. Nobody has a crystal ball. All we can work with is probabilities and try to make sound decisions. So on average, over the long term, we'll end up with a favorable return. Not buying, selling recommendation, I said that already. Don't invest money you cannot afford to lose. And don't don't go and try to get rich quick and all of that. I mean, let's face it, even if Goliath does end up becoming a great bear, yada yada, that's still not going to happen tomorrow or next month. I mean, if you know what I mean. It's like, hey, maybe Goliath gets sold for $1 to $2 billion, but that might be in 12 to 24 months. It's like, I don't know, or maybe it won't. Maybe for some reason it at the end of the day it's worth less than the market cap right now. I mean, you can't rule that out. It's like I'm leaning towards more that this is actually a significant discovery, and it's still open pretty much in a bunch of zones. So it's like there might be more yet. Anyway, thanks for listening. Bye bye.